I forgot to. I, I will definitely drop that in the chat. All right,
Okay.
so we'll go ahead and start with this Oliver Velez snippet that we started initially. This is the cons of trading. I don't even want to go over the pros of trading because everybody knows the pros or you wouldn't be here.
Years being a devoted evangelist for this industry, I have never skipped an opportunity to put the cons in your face because I think the cons, understanding them, is actually more important than recognizing and understanding the pros. Let's get to the cons. Con number one is the most important con of all. The odds are against you. Traders, listen to me carefully. The odds are against you. Traders, listen to me carefully. The odds are against you. One more time, listen to me carefully. You will never be able to fault me for failing to tell you this, for failing to put it in your face, for failing to shout it as loud as I possibly can. The odds are against you. Why? Because there's a 92% failure rate in the short-term oriented trading space. That's right, 92% of every one of you listening here will fail. 92% won't make it, no matter what you do, no matter how hard you work at it, no matter what your intentions are. 92% failure rate, and not me, not any firm in the United States, not any firm internationally, not any expert, not any mentor, not any trader, not any trainer, not any mentor can change this statistical fact. It is etched in stone, 92% failure rate. Now breathe that in, traders. I need you to understand this. I need you to understand what you're up against, because you ultimately, at the end of the day, are going to have to answer this question. This one very, very important question, traders. You're going to have to answer this. Do you understand? You're going to have to answer this. Do I have what it takes to be the 8%? Guys, this is a simple game, but it's not easy. There is a huge difference between simplicity and easy. It's simple. Markets go up, markets go down. Sometimes they go sideways. 3 possibilities: up, down, sideways, up, down, sideways. That's a simple rudimentary mechanism. But I am the last person on planet Earth that will tell you that this activity called day trading in particular is easy. It's not easy. In fact, it's one of the most challenging activities you as a human being will ever pick up. Do you know why? Because in order for there to even be a hope for mastering the market, you have to first master yourself. And let's face it, how many people actually master themselves in this world? How many people actually reach a point where they do what they say they're going to do? How many people really keep their promises to their kids, their wives, their husbands, their community at large, their societies, their personal God? Very few people reach the point in their life in anything where they have accumulated or accomplished self-mastery. But the only way to have any chance at success at this is to first master yourself. You can't take an unmastered you into the market and think that there's going to be success in the market. You can't take an undisciplined you and go find success. You can't take an untrained you and go into the market with your untrained self and think that you and your untrained state is going to pull money out of the markets. Won't happen. You can't be an ill-informed individual and take your ill-informed self into the market and pull money out of the markets. You can't take your unmastered self. You can't take your undisciplined self. You can't take your untrained self. You can't take your uneducated self. You can't take your uninformed self. You can't take who you are right now without changing yourself first. You can't take who you are right now and take who you are right now in the market and expect the market to give you money. So what must happen? You must first change. You must first go through a metamorphosis. You must first become educated. You must first become discipline. Discipline is not something you're born with. It's something you work on, like your muscles. You got to hit this thing up every couple of days, every day of the week, if you will, to build that muscle, to build that capability. You have to work on becoming disciplined. You have to work on becoming educated. You have to work on becoming experienced. This work happens first. And it is this work that transforms who you are. Then you take the transformed you into the market, and it is that transformed you that starts producing progress. But if you think that you can stay who you are without putting work into creating the change you need in yourself, if you think that there's just, I take this 2-day course and I go into the market, 2 days, it's not enough to change who you are. Take this 2-day course, go into the market, open up an account, and I should become rich in the next few weeks, then you should really find another freaking planet to work on, because you are living somewhere in outer space, not here on planet Earth. I don't know about any other planets, but that doesn't work here, not on planet Earth. I have yet to do intergalactic travel. I'm waiting for Elon Musk or somebody to make that possible. But until then, I only know what the situation here is on planet Earth. This industry has a 92% failure rate, largely because people don't want to go through what it takes to become someone different first. They want to stay who they are and take who they are into the market and take money out of the market. It will never happen. My mother used to say, Oliver, never say never. Oh, never say never, Oliver. Well, I'm telling you, Mom, sorry, never. Let me say it again. Never. All right, guys. I know I'm silly, but it's a point worth. I'm telling you, it's a point worth belaboring. All right? 92% failure rate. Get it locked into your head. Most people know nothing about financial markets. They think they do. Oh, well, the market goes up and the market goes down, right, Oliver? That's it? Yeah, that's pretty. Most people know nothing about financial markets. That's a con. And here's another big one, guys. Success comes after experience, and experience takes time, years. You can't be an experienced trader in 2 days. You can't be an experienced trader in 2 weeks. You can't be an experienced trader in 2 months. Becoming experienced takes time. You can't cheat experience. All right? Anything good that happens before you are experienced is called luck, traders. Only what happens after experience can you claim as yours. Listen to me carefully. You can't become successful before you become experienced. Get this in your head, people. You cannot experience true, real success before you become experienced. True, real success comes after you become experienced. And what's required to become experienced? Time. This is what people do not want to put into this. They want a microwave. They want a microwave results. Can I have my gourmet meal in 15 seconds? No, you cannot. This is the #1 reason why there are so many scams in this industry, because these scammers, right, which even I, believe it or not, have been accused of. Are you kidding me? Putting this truth in your face? How? But this is the #1 reason that scammers in this industry get away with their scams, because they sell you on the idea that anyone can do this. They do not tell you that 92% of the people are going to fail. They do not tell you that this is difficult. They do not tell you that you're going to fail first until you become experienced. They do not tell you that experience takes time. They do not tell you that success happens after experience. And before your experience, you're going to be a loser. The reason why, how many people are in this room? There's 427 people in this room instead of 40,000 people in this room. Do you know why? Do you know why there's only 400 people here instead of 40,000 people? Because I tell you this truth, 92% of you are not going to make it. There's only 400 people here because I tell you that success comes after experience. There's only 400 people here because I tell you that experience takes time. There's only 400 people here because I tell you what's real in this industry. If I went at 40,000 people in this room, I would constantly preach from every podium I can that everyone can do this, that you're all going to be successful, that it doesn't take time. Just follow these 3 things and get rich. I would have 40,000 people in this room. But I will never do that. You learn how to win in this business by first learning how to lose. Can I repeat that for you? You learn how to win by first learning how to lose. What does that mean, traders? You're going to lose first. What does that mean? You are going to become an expert loser before you see a single dollar, before you get winning trades consistently, before you call yourself a success, before you start to support yourself with this activity. You are going to be one of the greatest losing traders you have ever seen. You're going to become an expert at losing. You're going to become so intimate with losing, you're going to feel like this is just your natural state. You lose your way to success in this business. There is no way to win first because winning doesn't come before your experience. Experience comes after you have lost tens of thousands of times. Guys, listen to me carefully. I get very, very emotional about this, and I apologize. It's just the way it is. It's just me. I get emotional about this because I need all of you to understand this. There is a direct link between how much you lose first and how successful you are later. And isn't it ironic that what all of you are trying to do is you're trying not to lose the very thing that you need to do. The very thing that you need to do now is to lose as much as you possibly can to get the losses out of the way now. You don't want the losses in the future. Just get the losses out of the way. Become so intimate with losing. Become so intimate with every possible error, every possible mistake. Know it like the back of your hand so that at some point, the market can no longer fool you. The market can no longer trick you. The market can no longer surprise you. You've been there. You've done that. You know every possible mistake that can be made. You know every possible error, every booby trap, every dead end. The market loses its ability to punch you without you seeing the punch coming. How do you get to that state? You become an expert loser. Why is this a con? It's a con because most people don't have enough money to get through the losing period that happens first. First of all, they enter the game with this Mickey Mouse Disney idea that I'm supposed to win from day one. This is not Disney World. I'm sorry. This is not a Disney movie. This is real life. It is impossible for you to win until you become experienced. And it is impossible to become experienced until after you have become the #1 expert at what? Losing. How does a baby learn to walk? By running first? Wait, I'm going to learn to walk by sprinting first in the Olympics. Then I'll learn to walk later. No, a baby learns to walk by first trying to stand and falling. Standing, falling. Trying to stand, fall, 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 fall. Fall less. Fall less. Stable. Don't fall often. Take a step, fall. Take a step, fall. Take a step, fall. Take 2 steps, fall. Take 2 steps, fall. Take 3 steps. Falling, 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 falling until the baby becomes so intimate with falling and all the reasons for falling that he naturally starts to avoid the reasons, but not before becoming intimate with every possible way to fall. Doctors tell us that parents who overly protect their children from falling wind up with clumsy kids, zero athletic ability because they weren't allowed to fall enough.
All right, guys. I think you get the gist of what Oliver is talking about. And, you know, I can't stress it enough because it's the exact truth. The only difference that I'll say, or only thing that I'll bring out with this Oliver Velez commentary is you can use a demo account to prevent you from losing your money, right? And you'll learn how to trade or what to look for. But when you put your money in there, you're still going to have to deal with the psychology of seeing your money go into drawdown sometimes. You're going to have to learn to trust the setup regardless. You're going to have to understand that you're going to lose some trades still, even trading smart money concepts. You're going to lose. So the goal is to win 3 out of 10 trades, control your risk, and you'll be wildly successful. You win more than that, you'll be even more successful. But the point is, you want to get to a point to where you do the same thing every time. Consistency pays, patience pays, right? Once you see the market and you get your confirmation, be patient and always take the trade. If that's your setup, you take it. You don't think twice about it. You don't say, well, I lost the last trade, or I lost the last 2 trades. You pull the trigger, okay? Every time, and your consistency will reward you over the long haul. You know, I bring this up because, you know, in Ruby's group, you know, there was some conversation about the US 30, and somebody was saying to buy the market. And I'm like, why the hell would you buy the market in the middle of a correction? You don't buy it, man. Like, there's a general statement that goes, most people don't sell indices. Well, yeah, that's really correct during regular times. These aren't regular times. I mean, the indices are correcting. They're dropping. They're dropping because we're going to raise interest rates. Everybody knows it. So people are taking their money out of the US 30, out of those indices. Once the interest rate raises, after a time, they'll start buying those indices back. But now is not the time to be buying. Trust me, I know. I have great experience with this. I got killed in 2020 buying into a pullback. And that pullback, do you remember what did it correct? 15%? That was a 15% correction. And, you know, the NASDAQ is about 15% right now, 14%. So I think this correction will be worse, you know, when it's all said and done, because we haven't raised any interest rate. And they talk about having multiple interest rates raising this year. But on the flip side of that, if you don't want to sell the indices, or you just can't, you're not programmed to sell the indices, buy the freaking dollar, man. The USD pairs are going to go up. And if you haven't noticed that, pull out your higher time frame charts. Pull out the weekly, the monthly. You'll see the climb of the US dollar. And that's because of the pending interest rate hikes, okay? This is why they say if you understand the fundamentals, you don't have to wait on the chart signals. Like, you're just saying, well, I don't understand why Euro USD is dropping. I don't know what's going on. Well, that's what's going on. They know that the interest rate is about to climb, and that's going to make the dollar rise. So the big people are getting in the market now. They're buying the dollar while it's cheap, or it's at a cheap point, you know, for where it will be this time next year. So just kind of understand what goes on in the market. Just like Oliver said, most people don't know anything about the financial markets. We all have to start somewhere, but hopefully as you trade, you'll do a little bit to increase your knowledge about the markets that we're in. You'll do a little bit to increase your knowledge about the charts, about the price action. All, you know, you just study in different areas and it will all come to you. Okay. You guys know we started trading like retail tactics, support and resistance. And at some point we switched to the smart money concepts. And before, when we used to mark up charts, we used to all take turns in marking up charts. There was some conversation in the chat this week that everybody benefited from marking up the charts. So I'm going to get back to doing that. But we're going to mark them up, like we're doing smart money concepts. That way we're all on the same sheet of music. So what I want to do is mark up a pair, and I will mark it up, and then I'll let somebody else go for them to mark it up. I will explain as I go. I've explained this, several times to individuals, but I'm not sure if we've ever done this, as a group. And this would just be an in detail view of the way I see the markets. So I'm going to look at USD CAD.
Oh, I love UC, but it played me. But I love UC.
I don't know. I don't know what you made it play.
Oh, it played me before this little last green daily candle. You see that wick, that red wick candle? That wick got me. Took me out the trade.
Let me ask you something, Alicia. Which wick got you? This red wick?
Yeah, that one.
You thought it was going down?
No, I knew it was going up. I just didn't think it was ready. I was in too early.
So do you remember I dropped the concept in the chat?
For UC?
It's not necessarily about UC, but this is
the breaker thing?
Well, it's not a breaker, but this is a daily chart, right?
Uh-huh.
And you have swing highs, right? And you have swing lows.
Mm-hmm.
You got this swing low. You see that?
Mm-hmm.
I'm going to put a ray on it, a horizontal ray. I'm probably going to have to make this bigger and do some adjustments. I'm going to thin out this line so we can all see clearly. I didn't see this move, but this is why I dreamed of having a group, a community that I create myself, since we can't do this in other people's groups. We can't talk about outside stuff and outside theories. But in the chat this week, not to belabor the point, there was a video that I dropped in there. It was a Trading Nut episode. It's a podcast that I listened to. And this guy was trading with ICT content. ICT is the smart money trader that has these weird insights that nobody else seems to have. But the concept said, if you have a swing low, this is a swing low. Do you guys know what swing lows are or swing highs?
And it's like a lower low.
Okay, let me explain it. There's 3 points to a swing high and a swing low. You have a higher low, then you have a lower low. And then this next low is a higher low. So it's like a cone, right? Swing highs and swing lows are protected spots in the market. So when you get this swing low, you don't expect this swing low to be taken out. And whenever it does get taken out, you're going to get a liquidity run. You're going to get a explosion to the opposite side of the market, right? So if you look, and you guys do this on your own time, but if you look at these charts, especially on the daily, anytime that there's been a swing high or swing low taken out, you're going to see the market cascade into a different direction. So if you have this swing high, and if you zoom in, you'll see that there's a swing high in here. Here's a high, there's a higher high, then there's a lower high, right? Then it comes back immediately and takes this swing high out, and look at the drop in the market. That's big money. So if you recognize this as this swing low being taken out, and then it rejects, right? So basically, it's a reject candle. It took out that swing low. Here's the swing low. This price took it out. It went lower than this swing low. That tells you to buy, I'm going to make a lot of money. So in this case, you wouldn't even have to wait on all this to form, this bullish order block right here. In this case, once you recognize that, you drop down to the 15-minute time frame and you find you an entry, you get in this trade, because this trade is going to cascade to the upside. And this being the dollar CAD, I mean, this thing might go 800 or 900 pips. I don't know. I'm expecting this thing to climb at least 300 pips this week, but this is going to keep going. I mean, we know the science behind why the dollar is rising because of the interest rates. So maybe you could have gotten this trade when it took out that swing low. I mean, this trade might end way up here somewhere. So it's just a concept that was dropped in the chat. I know you saw it because we discussed it on EuroCAD, right?
Yeah. I mean, I went and watched the video, so.
You say you did watch it?
Yeah, I watched the video.
And so did you understood it?
Yeah. Mm-hmm.
Yeah. So for those of you who weren't on the end, this was a swing low that I saw get taken out by this move. And I called it out before this move actually happened. As a matter of fact, me and my brother got in the trade down here and got wicked out first. And I hopped back in.
Yeah,
but,
I am too.
Did you get wicked out or did you?
I'm still holding.
Still in there. Okay. So what I saw was this low right here. I had it marked up. And I thought that this green candle was going to start buying, so it wasn't going to get taken out. Then I saw it get taken out, and I was like, yes, we're in the money. So this move is going to continue to ride. It took out this swing low, so we're going to make a lot of money on this trade. And I think that it will probably come to the top side. If you noticed, it happened over here. We took out this swing high, the market cascaded down. It came back up, tapped this same area, and look at this move, all the way down. So these are opportunities that we have to take advantage of. But if you don't see that, or if you don't recognize it, like we didn't recognize this as a trading opportunity, right? So I'm going to break this chart down, or how I see this chart on the big picture. This is how I mark up my charts. At the end of every month, I automatically look at the monthly candle, okay? I'm going to delete all these markings. Okay, so I want to do what I call frame my market. I want to know where I can take a trade. So in order to frame a market, I'm going to find the lowest order block. When I say the lowest order block, I mean the lowest order block in reference to where the price is, okay? Now, you can use this order block, but I guess we really should use this order block, right? So there should be an understanding that price is within this monthly order block. As a matter of fact, let me just delete this because I don't want to confuse anybody. If price breaks out the bottom side, then we have to understand that this is the next protected zone, right? So with these order blocks being this close together, it tells me that the market is moving up. So I need to find the top of my market, all right? When I go over here, I don't see any recent order blocks on a monthly chart. So I'm not gonna look over there. I'm just gonna drop down the time frame and find my top using the weekly order blocks. Y'all understand that? So
no.
Who doesn't understand that?
Alicia.
All right.
On the monthly, you didn't see you looking for
so listen.
Green.
Hold on. Listen. On the monthly, you see how this is an order block, clear order block, right? Mm-hmm. There are no order blocks on the monthly scale in this range. If I want to find a monthly order block, I'm sure I can find one over here. Right? Like this is an order block right here. So I can find one. And this, as an honest trader, this is the top of your market. And that's not a lie. So because I don't want to confuse Alicia or anybody else, it's not just you, Alicia, but because I don't want to confuse anyone, I want everybody in this room to understand that our trade, this is the space that our trade is going to take place in, right? So we have a clear understanding that we expect our trade to take place between this order block and this order block. Does everybody understand that? Everybody tracking?
Yeah.
It's important that everybody understands this concept because this is how people get fooled in the market when you don't get that part. All right, so now I'm going to drop down a time frame, okay? Now, I want y'all to understand that I don't normally go to the monthly every week. I go to the monthly at the end of every month, all right? Because I already have my bias. Judging from that monthly, this month, this is where my trades will take place, okay? So if it breaks out the bottom, then I'll have to go and reassess on that monthly monthly calendar or monthly chart. Everybody got that?
Yeah.
Okay, so now I'm going to do the same thing with the weekly chart. I don't need to find a weekly order block down here because we're within the monthly. But what I do need to find is how high the price can go based on the weekly order block. And here's my first order block. So I'm looking to trade price from here to here. 535 pips range, that's perfect, right? Over the next several weeks, I'm looking to take a trade from here to here. Are y'all tracking?
Yep.
If price moves from order block to order block, which I believe it does, which we all believe it does, then we're saying that as long as price is going up, this is the target, 532 pips. Now, I'm not saying that we have to get that tomorrow. I'm not saying it's going to happen in the next 2 weeks, but this is where price is headed. I want everybody to understand that. That's how you look at that. So once we have it framed again, now we can go to the daily.
That's why I was confused by when you said there was no order block on the monthly chart, because this is my area of entry also. So that's why I was like, what you mean ain't no order block? But I was just too ahead, my bad.
So yeah, so y'all, I mean, that's cool. I just want everybody to get clarity. So we went from having to worry about this range up here. We don't even worry about this now, right? I'm not going to delete it. I'll leave it alone. But so far I have 3 markings on my chart. I have the weekly order block and the 2 monthly order blocks, right? And because we're within this monthly order block, I don't even have to look for another weekly. If it was one here, I could see it and maybe mark it out, but it's not even that serious. So let's look at the daily. All right, the picture gets a little bit more clear when you start looking at this daily order block. So right here, the market has already made a move up, and it's provided a bullish order block right here. Right? So I don't expect the market to push down past this point. I expect for the market to start here and continue to rise, okay? Now, your first target, if you take the trade, you're partial out at the top of this candle. The next target, here's an order block right here, right? Now, I just told you that we want to take a trade, or we just saw that our target is here. But we can partial out at the top of this first candle, which is, I don't know how many pips that is. Do you know, Alicia?
No.
This first candle is 80 pips. Then to the order block, 168 pips. Okay. So if you understand good price action, then you want to see when the market opens, you want to see the wick of this candle come down into your order block, tap it, and move away, right? But we understand that sometimes the market moves so fast, right? Like this looked like it has great momentum. Sometimes the market moves so fast that you won't get good price action. You'll get a lot of imbalances, right? Everybody understands what an imbalance is. So if this wick, if the wick of this third candle that starts, if it doesn't come down to the top of this red candle wick, let me get real detailed. So the wick of the next candle, of tomorrow's candle, needs to come all the way down and touch this red line in order for us to have good price action. And then the move needs to happen away, okay? Does everybody understand that? That's good price action. If you look at these candles over here, right? This candle right here, the wick is here. The next candle, the candle pushes down into this candle and goes up. This third candle, this wick should have came all the way down to the top of here, but it didn't. It left an imbalance.
And the imbalance is just like when the market pushes up, it has to fill that void.
So imbalance means there were only buyers in the market. Sellers didn't get an opportunity to participate in this blocked area. So what needs to happen is the market needs to come back later and fill this imbalance to the halfway point, right? So
there were only buyers. You probably need to stipulate in that case.
What
can happen with sales too.
I'm talking about this particular situation. So my brother says that I should stipulate that only buyers in this situation. If this was a down move, of course, like this down move, there was only sellers in this market. Y'all understand that? I don't want to insult anybody's intelligence. So there's an imbalance here. This candle, we need to fill this imbalance to the 50% line, and that will be considered a closed imbalance, right?
No, it closed to when this red candle over to the right filled it, right?
No, listen. If an imbalance is filled to the 50% line, it's considered closed. I don't know if this is the 50% line unless I use the Gann box. Mm-hmm. But that's the definition of a filled imbalance. Let's just say this is not a 50% fill and the market comes down and this red candle comes through. That's considered closed. You're correct in that. Okay. I'm not arguing that, but I'm just telling you the technical definition of a filled imbalance is if the wick comes down to the 50% mark of an imbalance, it is considered a closed imbalance. Not my rule. That's just how it's viewed. Okay. All an imbalance is a bunch of open bank orders, you know? So if a bank or an institution was taking a trade from this order block, maybe they put $5 trillion of buys in and the market shoots up. Sellers didn't get a chance to put any sell orders in. So you can't just buy without having something to buy. So if there's not enough sellers, the price shoots up, but they eventually have to allow people to sell some orders in order to balance the books. That's how I understand it. There are 1,000 videos out there on imbalances. Please do what you have to do to research those. And that's what I mean by doing some research on your own. Study imbalances, study order blocks. And while I'm on that order block thing, there's tons of different ways to mark up and use your order blocks. Some people don't use the wicks, other people use the wicks. I think it's important to understand that an order block is the whole candle. It's not just the bodies. Now we might use just the bodies, but it's really this entire candle. The best explanation that I've heard of it was the majority of the trades or the majority of the business happens in the body of this candle, right? The majority of the buy orders happened in this red sell candle. That's the majority of these buy orders. They exchanged in the bodies of this red candle. You had some outliers down here and some outliers up here, but the majority of the business happened within the body of this red candle. So whenever I trade, I don't typically use the wicks. I use the bodies. And when I put my stop loss, I tend to use the bodies, not the wicks. Now, the important thing is you need to be consistent, right? You're going to lose some trades because some trades are going to wick past the body. You got to be okay with that. You're not going to get in every trade because when the order comes down to fill, if there's a wick on the top of the candle, it might come just to that wick and take off. And your entry was the actual body. So it'll hit that wick and take off and you're not going to be in the trade. You have to be okay with that, okay? You're going to get your fair share of trades, but if you're consistent, you will win consistently and you will lose consistently, and your wins will outnumber your losses, and they will do it on a consistent basis. When you start switching it up, then you're going to switch up your consistency, and that's what causes people to get misled, in trades. All right, but I don't want to go off into the weeds too much on this, right? I just want us to understand that good price action is this candle coming down all the way, touching this, the same level as the wick of the inside candle and going up. I don't expect to get this type of price action in a market that is exploding to the upside or to the downside, right? So there's a great technique that Alicia taught us that we can use to find alternative entries, okay? You just grab your fib. I'm going to measure this green candle, just this one daily candle. I'm going to measure to the top of that wick. I have my golden zone marked up. That's the 50% to the 62 or 61.8 or whatever it is, right? I'm going to put a box around it. That's when I'm going to start watching this market. So Sunday, the market is going to open, and I expect for this price to push down. It might push up first, but I expect for it to come down. And in this area, we can drop down and look. You drop down to the 4-hour first. Okay, this is my area of interest. I can see an order block just south of it. Here's an order block on the 4-hour chart. I'm going to drop down to the 15-minute chart to see if I can get an order block in my area. There's an order block just south right here on the 15-minute mark. So maybe price pushes down into this area and goes to this order block. Maybe it pushes down and hits this order block just short of the area and rises. I really expect for it to push down into this area, okay? Once it gets to your area of interest, you're going to wait to see rejection. All right. What is rejection? It's a reversal. It's the market coming down and doing this. All right. It's the market coming down and wicking out. And then once you see that rejection, you want to see a break of structure. So this is price. This is a high right here. You want to see the market break that structure. It's going to give you a bullish order block over here. Then you can hop in the trade and take it to the upside. Y'all see that? This order block, you would have got taken out. You win some, you lose some. Then it gives you another order block. You'd have tried to get in, you wouldn't have got any entry. This order block right here, you would have got in. So my point is, I don't take order block trades, or I don't want you guys to take order block trades on the 15-minute time frame. And I mean, if you're advanced, you can go ahead and try that, but you're going to get faked out more often on a lower time frame than you are on the higher time frame. That's why whenever I teach this, if you take all your trades on this daily or 8-hour time frame, your win ratio is extremely high, okay? So go back and back test it, and you'll see how much you'll win. Now, you might only get 2 or 3 trades that week, but that's all you need, man, especially if you're getting 100, 200 pips. You don't need a whole bunch of trades. So as a recap, this is my area of interest. This is my 50% Fed pullback. You can label it if you need to. Come over here, either use the text box or this call out block, and you can label your chart, okay? So since I already know that this is my order block on the daily, I don't have to label this. I know this big purple space is the monthly order block. This is my 50% fib level that I'm looking for the price to retrace to. And then I'm taking this trade to the upside. So I can just go ahead and put my long position on here. And I can put it like so. If you want to, you can start it here at the 50% mark. You'll have to cover a larger area for a stop loss, which is 53%. Let's say you're going to sleep at night. You really want to take this trade. You really believe in this trade idea or whatever. You need to cover this entire area. So you would have to use, a 51 pip stop loss. Now, you can target these higher areas, but you need to label also your take profits. Take profit 1, take profit 2, take profit 3, take profit 4. Okay. Now, at your first take profit area, you want to make sure you take enough profit to cover for that stop loss, right? So you have to protect 51 pips. So I don't know, let's say this was $1 per pip, right? You're going to have to partial enough to where you will take $51.2, right? And then let the rest of the trade run. So that you got to bear in mind that fact. So knowing that, either you're not going to partial here or you're not going to take an entry here. Maybe you'll watch it, and if it rejects here, then you'll take a trade based off of a smaller stop loss. Maybe that just that fib area that gives you a 14 pip stop loss, and this first partial is a profitable partial, and then you let the rest of the trade run. You guys understand that, or is that complicated?
Shit is too fucking complicated.
No, I get it.
Who doesn't get it? I know it's people that don't get it.
I don't get that shit.
All righty. So what I want to do is I want somebody else to break down USD Chef. Who wants to break down USD Chef?
I want to break it down.
Who said that?
Me, Bree. I'll do it.
Okay, Bree, what I'm going to do is, have you ever been a host at one of these meetings?
Yes. Let me see.
I'm going to pass it to you because I don't know how to allow everybody to share.
Okay.
I'm going to make it and now I'm going to stop my screen share, and then you can share your screen and you can break down that.
Okay. Let me just get the boys.
Hey, Essence, you're next, please.
Let me find it on the USD.
I'm not on my computer.
Oh, that's bull. I know you next to your computer. So log on with your computer.
Share screen. Okay. So we're looking for the most recent order block, right? Let me see. You want to frame the market on the monthly and end the month. So let me do this.
That's my ugly candles, girl. They hurt my face.
Okay, so let me see. Frame monthly at end of month, lowest order block in reference to where the price is. Okay, so then, let me see. Go wash your hands. In my room. I'm sorry. Okay, so I see an order block here. Well, no, because price didn't respect it.
Price went lower.
Yeah, so, right here.
Perfect.
Okay. So then I put a box around it, right? On the monthly, but you use the bodies. So I'm gonna use the body. Okay. And then if the order box monthly, go to weekly and find the reason. And then I look for the order block up here. Okay. Yeah, okay. And then price go to the daily. So then I go to the daily.
Cool.
Okay. And then find the order block on the daily, which I'm looking for a bullish order block, right? Okay, maybe
you're looking for the order block period. I mean, you can't predetermine
okay.
what it is.
Okay, well, here's the order block, right? I mean, these two are order blocks.
Where?
You said no?
Where's your order block?
The order block is right here. The weekly order block.
I understand that, but on the daily chart, where's your order block? Where is your? Why are you putting the box there?
Well, I was just getting it ready. So the order block on the daily, it doesn't matter which. So there's one right here. No, that's not an order block. There's one right here.
Perfect. Put it on that one.
And then just the body, right?
Mm-hmm.
That's what you, okay.
So that's the top of your market. Where's the bottom?
The bottom of my market would be, right here.
Right where?
No, that's not an order block. I guess this is an order block.
Don't guess.
This is an order block.
I don't agree. Where's the order block? Show it to me.
Right here.
Okay, so did anything go lower than that?
Oh, the most recent order block. Oh, right. No, I mean.
Yeah, so you need to squeeze your screen together. Sometimes it's, see it over there? Keep dropping.
All right.
I mean, it's over further. Is that an order block? I can't really tell. It might be one, but your candles are purple, and that area is purple. Is that an order? That's an order block for real. But I don't know. Is that one over there that you were just at? Is it just like that one? No, I don't.
Right here.
Well, that is an order block. That's definitely an order block. But I think the market went lower than that, didn't it?
Yeah, I think where her box is
yeah, okay. Me too. It's just her candle colors is got my eyes jacked up in that purple area. All right, so you need to drag that over, like make it longer. No, yeah. Oh, you extend to the right. All right. So that's where your trade is going to happen. What's the pip count between that area?
104 pips.
Okay, so how is this market going to move?
What was that?
How is the market going to move?
It should retrace to the order block and then push up.
Are you guessing or are you just saying it? Like,
well, because the USD is going up per the interest rates.
So USD, if USD,
goes,
but that trade right there is going down, right?
Right. Well, the prices go from order block to order block. So
I got it. But are we expecting a sell or are we expecting a buy?
Right now, it's sell.
Okay. So that sell candle, the last candle,
okay.
Put the fib on it and get your retracement. This is
I don't have my fib settings. Okay, so oops. I don't really know how to use the fib, and these settings are crazy.
Okay, so just measure the fib from the order block. The last candle, all the way to the bottom, to the wick.
So let me zoom in.
So make it bigger first. Yeah.
Okay. So measure this.
No, you gotta lay it the other way.
Okay. So this.
And you reach your 50 to 6. No, you do it to the wick, do it to the wick, do it to the wick.
Oh, to the wick.
The fib is always wick to wick.
To wick, okay.
The 50% area.
My 50% area is here. Let me change. Okay. I don't love you. Okay.
So delete the fib. Now, remember I told you about, what did I said the order block was really the whole candle?
Right.
So that 50% area is really within that order block, right?
Right.
You understand that? I mean, this is the importance, in my opinion, of having a decent understanding of true price action, right? You understand that price action, in order to close or to prevent an imbalance, the start of this new bearish candle needs to go down to the wick of that bullish candle right there, of that hammer. And as long as it goes there, you don't have any imbalance and it's smooth price action. And it just so happens that Alicia's target range is right at that spot. So if price came right there and pushed off, I wouldn't be surprised.
The price came right here.
Yeah.
And then went bearish.
Well, that's what we expect, right? This is
right, because the bearish order block.
Right. This is a bearish scenario, so we do expect the price to drop. I would anticipate that it's going to drop. You know, it can drop anywhere from that zone that you have marked out all the way to that order block.
All right, to this order block.
Well, up to the order block. Go back up. So it's going when the market takes off, I expect it to go up into that either your order block or your 50% area. And then
from where it's at now.
Yes.
So you expect it to do this.
Perfect.
And then go.
Yes, down to the other order block.
Order block, which is here.
Yep. And then we'll have to watch for a reaction. So now go back to your weekly chart. I just want to see something on the weekly. What is this weekly thing saying?
Weekly.
That's the daily order block. Where's your okay, so maybe it'll bounce from right there and just start going up. What do you think, Alicia? I think it is. Because in the big picture of things is USD. If USD chef a buy or a sell, big picture wise. We know we're at the bottom of the market. So we expect for it to buy, right?
Right. Oh, I see. Okay.
No, I feel like it could fake out down below, just to that area and then go back up.
Well, this is what I want the group to understand. if you go from the monthly view, go back to the monthly. Now, if you look at that monthly, you have higher lows, right?
Mm-hmm.
Now, granted, if you understand candlesticks, you have a bunch of gravestone dojis in a row, which is saying that the market is about to drop, right? You see that? You know what? Are y'all familiar with the candles?
Right. Yes.
So those last 3 candles are all sell signals
So
in the JCP app. So this market could very well collapse and go down the other way. And if that's the case, then maybe it's due to the Evergrande fears or something else. I don't know why a USD pair would sell in the face of higher interest rates, but it is what it is, right? Like, we only have to go by the order blocks on the chart. The order blocks are saying this is a sell for at least today. So until we have anything different, then we just have to sell it. You know what I'm saying? Maybe it'll come down and double bottom down here. I don't know. But I'm not going to buy it just because I know interest rates are climbing and the rest of USD pairs are going up. You know, you just have to kind of understand it. And here's another thing. If you don't feel comfortable trading it down, then you don't have to trade this pair. But if you're going to trade this pair, you have to respect what the charts and the order blocks are giving you. All right. Some people will say, well, you know, all the USD pairs are going up, so I'm going to buy USD Chef. You can't just do that. You got to understand that there are forces out there that may be causing USD Chef to lag behind. So this is definitely bearish for a day. And go to the weekly. I would assume that it's probably going to last more than a day, because do we have any? I don't see any bullish order blocks. So we just have to play it by ear. That's definitely a sell. You know, until it gives us something else to work with, we have to play it for ourselves.
okay. Got it. Thank you.
Okay, was that easy?
Relatively, yes. It makes more sense.
Hey, are you ready? You ready, Essence?
Yes.
Can you give Essence the controls? You know how to do it?
Essence. Okay. Make host. Okay. Go, girl.
Okay. Am I supposed to share?
Yes, the only way we can see it.
Okay.
Please share.
Share desktop. Okay. Okay. I'm not sure where I'm supposed to go to.
Just go to your trading view.
Yes. But what pair am I gonna be?
Yeah, I mean, it's up to you.
Oh. Oh crap. I guess I can do, let's see. Okay, I'll do this one. AUD, CAD.
Is it, go to the monthly and break it down from there, please.
Okay. I'm supposed to take the fib out.
Is this the monthly candle?
Yeah, it's the monthly. To this one, to that one right there.
What are you measuring?
Then I need to put the box.
What are you measuring?
My last month's candle.
Okay, go ahead.
And then
y'all, she's doing it a little bit differently than
monthly 50%. And then there's an order block right here.
But why would you need to go that high?
Well,
What happened last month?
There's one right here next to it as well.
Essence. Okay. Delete that box you just made. Look at the January candle. Put your cursor on the January candle.
This one right here. This one right here.
Okay. Now put your cursor on the December candle.
This one right here.
So what is that? From December to January.
I guess you can say that's also an order block as well.
You mean you guess? Come on now.
Okay. So then I'll put it right here down to there. Then I'll make it, oh, it's already to the color. I need to change the color. Okay. And then, oh, I already have. Okay, so then I'll go to weekly. And there's another order block right here.
Okay.
And it has a hammer as well, which kind of means like it might buy. Okay. Yes.
All these colors, man. God damn.
Well, because I can't do the same color because then I'll get confused and I have to label them and stuff. Okay. And then I guess I can do my weekly 50% as well, correct?
So I mean you could do all that, Essence. But
Okay.
here's what I'm saying. That on that monthly 50% is going to change because we still have a whole week left of trading. Depends on what happens this week. That monthly
so
50
still has time to go to the monthly.
Yeah,
right?
so that's why I didn't do that on my chart. And I get it.
I already went to the monthly.
Yeah, I just wanted you to go to the monthly to frame the market. So
okay.
So just for me, can you delete that monthly 50%?
All right.
I don't want to confuse anybody. So what I was interested in doing was framing the market, right? So you frame the top of the market with that dark red order block, right?
Yes.
Okay, and where's the bottom of the market? Go back to the monthly.
Oh, go back to the monthly. Well, it's going to be all the way down here.
Okay, cool. So that's your range for the monthly. Now drop to the weekly.
Okay.
Okay, so that area, you see where you have bullish weekly order block beneath?
Yes.
That needs to come up because there's a actual, it doesn't need to be that low. You see that bullish order block right there?
I can do this one right here.
Yes, that's your bullish weekly.
Oh, okay. Okay. Oh, well, I can just.
But hold on, just delete it. Just delete it. You don't need to, just delete it.
This one?
Yeah.
Okay.
Delete it. Because you see, go up past the monthly to the other one you did, the other weekly order block you did.
Right here.
Yes, price hasn't broke out of there yet. So you can't identify a lower range until price breaks out of there. How do you know it's even going to trade south?
I guess I don't know.
Well,
it's not because it's going to go up. Well, I don't know until next
week. You don't know. And so I'm glad you picked this pair because this is the problem that we find ourselves in when we start trading. Make your screen bigger, please.
Okay.
Okay, so when you frame your market, where is your trading range? I'll help you. You don't have one.
Yeah, right here. There's an order block right here.
Essence.
No. Okay.
Listen to what I'm. This is the point I'm trying to make. Which time frames hold the most weight?
The higher ones.
Okay, so go to the monthly.
Okay. Wait, where did I go? Hold on. Okay, monthly.
Now, where is your monthly order block?
There's one right here. Well, there's one right here.
Yes.
One right there.
Go to the lower one, the one that the price is below. Price is directly below that monthly order block. Draw that monthly order block out. Make it bigger so everybody can see it.
Okay.
So if you're telling me the higher time frames hold the most weight, and this is the highest time frame, and it gave you a bearish order block, price is not going up. Y'all understand that? I need every trader to look at this. This is very important. This is a bearish order block on the highest time frame we have. Why would anybody look for a trade going up past the order block, right?
Okay.
Okay. So now so you know you're looking for a short. So go to the weekly.
Go to weekly.
Make it bigger.
Okay. Bigger.
It's too far to the bottom, I think.
You want it right here? Or?
No, I mean, put the screen, yeah, pull the screen up so I can. Okay, so this weekly, the order block is touching the monthly. So where's your trading range? You don't have one. There's no clear area in there. And now obviously price can't stay where it's at now. But my point to you and anybody else who's listening is you don't need to trade this. There's no clear path. Price is going to choose a direction, but who the hell knows what direction? Why would I lose money trading a pair that I don't know where it's going?
Mm-hmm. So
type in GU, GBP USD.
GBP.
Todd, I have a quick question.
Yes.
On Essence's chart. Are the moving averages crossing over? Would that be any type of?
So they crossed over twice. It is an indication. They crossed over once right there, and they crossing back over now. It seems confused to me.
Okay.
Right. This is my only point. Like you can trade that range right there, right? It's only a matter of time before you lose money, guys. This is not a good setup. This is a setup that you just throw an X on. Maybe you can trade it next week. Why do you have to trade this pair? When there are so many other pairs that will give you a clear path to money. So, I mean, I'm not, look, you guys do what you want to do when it comes to trading. I'm just trying to show you that there is an easier way to find your setups and your money. You don't, if you get a pair that looks like this, wait until it makes a decision. I mean, why are we married to AUD CAD? Screw that. You know, go to GU.
Okay.
Go to EU. You know, I mean, so, look at that. Is it going? There's a bullish. I mean, there's a bearish order block, right?
Yes.
And look at the bullish order block. It's a ways down. How many pips is that?
Let me check. Let's see. It's right here. 280.
So y'all wouldn't you rather trade with a free 280 pips than to trade that other mess that we don't know? I mean, anywhere in those order blocks, price can do anything. It can go north or it can go south. It's going to have to break one of those order blocks. Maybe it'll break the weekly one since the monthly one is a higher time frame. Or maybe it's time for that price to push up. We don't know. Like none of us can say because we aren't in control. So since we don't have a range, why the heck would we trade it? Y'all understand what I'm saying?
Yeah, makes sense.
Yeah.
Okay, go ahead, Essence.
What do you want me to do?
Mark this chart up.
Oh, okay.
You basically have it. You don't have to go back to the monthly because we understand the month. Just you can start right here at the weekly.
So the weekly bearish order block, and then it went down, and that's the 50% area that I feel like it's gonna go back up and touch, and then it's gonna go down to this.
Okay, just for everybody's edification, right? I can see at the bullish weekly order block that you use wicks.
Yes.
Okay, that's fine. I guess my question to you is, why don't you have the bearish order block marked out? I see the one above you have marked out.
You mean the current one that it just made?
Yeah.
Maybe because it was still trading that on Friday.
Okay, so now it's a new week, so I need your chart to accurately reflect.
Okay. So then I'm gonna do this, and I'm gonna take it this way, right there. Take it that way. Okay. And
you can move those. You can just drag those words down.
Oh, it's okay. I just type it inside of there.
Go ahead.
Oh, okay. Perfect.
Can you delete your other one, please?
Oh, this one?
Okay. So you're expecting price to pull back, go up into that order block, and then push down?
Yeah, right to this little 50%.
Okay, so I'm glad I see your alarm on. You have an alarm on this pair?
Oh yeah, I did.
Well, that's cool, because I failed to mention that. You guys don't have to watch these pairs. You can just right click at the spot that you want the alarm to go off on. So if you want that alarm to go off 10 pips before it gets to your 50% level, you can right click 10 pips before it gets to your level, and you can right click and hit alert, and it will send you an alert to your email, if you get email on your phone, it'll come to your phone, and it'll start making this absurdly loud noise. Okay. All right. So GU is a sell for the week, right?
Yes. Yes.
Okay. I concur. Does anybody else have any see anything different? All righty, who's next?
I don't know how to do that stuff.
You don't know how to do what? Give control up?
Yeah.
You just go to members or participants.
Okay.
And you can highlight who's next. Come on, Alicia, Felicia, Jesus.
I'll take it.
And so then I push more.
Yep.
Then make host.
Perfect. And then you got to stop sharing.
Oh, okay. Let me stop sharing too. Did I stop?
Yeah.
Okay.
Jesus connected to his iPhone, so he didn't have to do it.
I just woke up from a nap.
Jesus, you should be on your computer, man. I know you need this. Jesus walks.
I'm getting up now.
Oh, let me share screen. I like EA.
I don't like EA, but it's all good. EA Sports is all I like. You gotta share your screen at least.
Coming.
Hey, y'all, Alicia's like the master chart marker.
Am not. You know what? Maybe I don't like it. It's this wick that has been getting me for quite some time.
Which wick?
This.
Oh, that long time. Yeah, I remember when we were trading that pair up when that wick happened.
Yeah. Yeah, I think that was a real bad news there, something like that.
That was great news.
Not for me.
Oh, you was in the sale?
Not for me. Okay. So what am I looking for? Because this would be the order block.
Where? I can't see that.
Either here, this one got some respect.
Can we can you
y'all can't see, I'm sorry.
No, I mean them things look like microscopes.
My bad. Can y'all see now?
Yeah.
Okay. So it's safe to say this is our order block, right?
I agree with that.
This is our direction. And then
where's the bottom of the market?
You mean back here?
Well, I mean wherever a bullish order block exists on the month.
This area, oh shoot, or this area, but
no, that's the top one is good. That's not a bullish order block right there.
You don't think so?
No, it's not. But on a lower time frame it is, but not on that monthly.
Okay.
And you're saying that it's not because of the size of the next candle, Todd?
I think you're saying it's not because it's not the most recent, but it's definitely an order block.
The red candle, the red candle is not. It can't be bigger than the green candle. The green candle has to be bigger to break the structure.
But listen, you have if you combine all three of these candles, that's one candle. And this will be, if this is a higher time frame.
But Alicia, this is the highest this time frame goes.
I know, I'm saying, I know, but yeah, that's all I think about when I see stuff like that. I just combine the candles.
I don't want you to get all advanced and add up candlesticks. What we're trying to do is, this is a very easy concept to help people see the market. Now, all that getting jiggy and putting sauce on it, that's cool, but do it, do it as your understanding grows. When you come here, you gotta be basic.
Right. Yeah, I mean, this is the most recent for the monthly chart, so it makes sense. So we're currently in a downtrend.
When you make it skinny like that, we can't really tell.
I can see. I'm sorry. Is that better or what?
That's better right there.
Okay. I'm sorry.
Hey, Alicia, I'm 50, man. Like, my eyes don't work the same.
Okay, so
you got to frame it on the weekly.
We have price trying to come to this bearish order block. Let me look up.
And where's your bullish order block? Where's the bottom on the weekly?
Here. Right. Good.
Yeah. That makes things interesting.
Todd, with Alicia's last order block, are order blocks like imbalances as far as being 50% of the way, or do they need to be, does it work out better if they're completely closed?
Order blocks are the entire candle. Now, there are some people out there that use their stop loss or their entry point at 50% of the order block, right? So in this case, with Alicia's order block that she has marked up now, that person would have entered that trade at a small stop loss and gotten paid, right? That trade would have worked out for them. But a lot of times, if price just comes and taps the top of that order block and leaves, they won't be able to get in the trade. So that's a personal decision on the way you guys trade order blocks. I use the entire order block, the body of the order block, not necessarily the wick. So I'll have to cover the entire area as a stop loss. See, Alicia uses half of it, so her stop loss only has to cover half of the order block. So her risk to reward on this trade is going to be better than mine. She would make more money on this particular trade than I would make. And I'm okay with that. Y'all understand that? There's always a way to get jiggy with whatever you're doing. You can get jiggy with the Fibonacci, like Alicia showed us, or you can just be straight up, and it all depends on you. And you'll make money if you're consistent, whichever way you use it. My only problem with Alicia is she don't even take the setups that she sees.
Yes, I do.
No, you don't.
Yes, I do. I just be trying to keep my stop loss small. So a lot of times I hurt myself. Once I get stopped out, I move on. I don't come back. So
okay.
It's like
so you got to do the day. You got to do your order block on a daily.
Order block on the daily. I mean, what you mean, refine the order block?
No, there's a bullish order block. The last two candles.
This one.
That's a bullish order block. So what's your trading range?
From here to here.
So, well, it ain't all the way up there. It's just from there to the tip. You know, smart money is only right there beside it. That's so from there to the bottom of that other green. That's how many pips? Oh, that's that many pips. That's still a lot of pips. Keep going up to the top.
That's why I like EA because it pays.
Wait, scroll down a little bit. Go down.
Down. Wait a minute. You mean right here?
No, I want you to go from the top of that order block to the bottom of the weekly order block, because that's your trading range.
Man, at this point, I'm confused.
Not down there. Up.
This one?
No.
Up here? It's too many.
Right there. That's
boxes
the top.
On here.
That's the top.
Okay.
But price is going to go back into your order block, right? It's going to pull back first. So you would measure that whole range.
This whole range? Or you mean this area?
There you go. Oh, I didn't know that was 200 pips. 182.
Yeah, that's why I like EA.
Oh, Alicia, you've been holding out on us.
EA pays. I think it's AUD because GA pay. I mean, yeah, GA pays. Like the pip count is a lot different.
Hey, did y'all know that?
That's why I keep coming back to EA.
Yeah, I didn't know that. The hell with EA? It's still too small. But anyway, go ahead. So, where are you going to enter your trade at?
50% of this engulfing candle. We got a little order block right here. I can't do all these boxes. I'm so confused. I ain't even gonna lie. I guess what it is that like I usually refine order blocks, but see, this order block is the wick of that daily candle.
So when you refine them, you go down to like the 4 hour or the 15-minute? Yeah,
and refine the candle. And that's what I meant from the higher time frame. See, all these candles make the daily order block. That's what I was saying.
I know. Okay. No, don't do that. Oh.
Okay, but yeah, I'm gonna be honest, I'm very confused right now.
Okay, so go back to the daily.
Okay.
And put your box back around the order block.
Mm-hmm.
Just put the fib on that green daily candle.
We want
from the bottom to the top, and it should retrace to your golden zone, to your 50, 61, and 28, which would be the top of that order block, right?
Yeah. So I would refine, okay, because I was a little lost at first. So I refine that order block, and you see these candles respected this area, whatever is right here.
I don't want to hear about your support and resistance.
I'm not talking about support and resistance. I said price respected this order block. I'm messing with you. Yeah, I'm telling you, Ty go get going on. But no, price respected it. So, but see what I'm saying is, you know, it might come down and just take out these lows because this is liquidity when price keeps stopping here.
I agree with what you're saying.
So it might leave a little wick lower than these wicks when it comes back. So I would try to enter.
Y'all see how you see how Alicia has complicated my very simple
Dang, did I
concept?
complicate it? This will be the setup though. I just
Well, of course it would.
I actually sold EA Friday too, and it didn't go nowhere. But
you sold it?
I did.
Wait, why'd you sell it?
I was looking at something else.
I was looking at something else. Yeah.
I didn't know nothing about no order block.
That's like Friday. Tanisha put in the chat that you could buy the indices. I had to write a paragraph this morning. I was like,
yeah.
Des said buy Nas. I didn't check, but
listen, man. Yeah, I don't. Now is not the time to be buying those indices. The up moves are retracement moves at this point. Those indices are in full-fledged retreat, man. Like, we're having a correction. Nas is corrected 14%, and US 30 has corrected 7.7%. It will continue to correct because they're going to raise the interest rates. Tuesday, the Fed has a meeting. So if they don't walk back those things, it's going to drop like hell Tuesday too. And, at this point, I think they're going to have to go ahead and raise the interest rate. I mean, you're already paying like $25 for a pack of pork chops, a family pack, man. You're crazy.
Mm-hmm. Yeah, she. I could see. I guess I could see why you was trying to sell Friday.
Why? Because it was a M. Because
it broke structure here with this area, made a lower low. What?
Because I don't even like to talk that type of talk anymore. So
you're saying because it. See, but you said this is not an order block because this candle is bigger than this one.
Well,
but it's respected.
That's a bearish order block right there.
But the next candle invalidated it.
Well,
because
it went. Listen, this is my whole point, guys. Go back, box out that bearish order block right there. Alicia, you just pointed to.
This.
Yeah. No, just the top, the top of it, with that green candle.
Oh, okay.
This one?
Yeah. You got the green candle and then the red candle. That's a bearish order block. So I don't know why did you erase the green box below there that you have?
It is hurting my eyes.
But I was gonna make a point with that green box.
Yeah, let me put it back.
So this is my point. This is what I always try to tell people. You see that green, my point at the green order block, the green bearish order block that you just made. So if you try to trade between that range, why? It's not enough to make it, that would be enough to tell you don't trade this. So there's no chance of you being confused. There is no reason to trade that order block right next to the weekly order block because you have no clue what the price is going to do. So stay away from it. Now, don't get me wrong. There are ways to trade this pair right now as it's moving, right? But what I'm trying to do, guys, is create a very simple system that will only pay you. You're not going to make every trade, right? You're not going to trade every scenario. All you're looking for is those basic scenarios that pay out every freaking time. I dropped my demo in the chat last week. Ridiculous profit, just doing this, basic setups, not taking the crap load of trades. I think I took 4 or 5 trades. They're all going to pay you because there's plenty of room for those things to run. Don't just trade something you say, oh, this is my favorite pair. We're trading your demo. So when you start losing, your psyche ain't jacked up. By blocking out, by marking out all your order blocks, it frames where your trading range is. It shows you. Like if you got all those green boxes together, that means you don't have no room. You know what I'm
saying? Yeah.
But whether it be on any time frame, pretty much.
Well, I mean, you see the time, all those order blocks are going to have an effect on the price. So why would you trade a range? Now, listen, a 200 pip range is not bad. I just thought it was, to me, it looks small, but a 200 pip range is not bad. So I would trade this pair up 200 pips, but you know, I'm not trading that little bitty slither on the bottom of that. Hell no, I'm not trading that. Especially when there's pairs that are giving me 200 or 300 pips that can roll. Prices just roll. I'm not waking up in the middle of the night sweating because I think price is going to reverse on me. I'd just rather not trade that pair until it gives me a better range. And that's to me, if you can find pairs that give you a range, you stay in profits. And the name of the game is to make money. The name of the game is not to have a favorite pair. You know, I know what some people say, but I'm trying to show you a system that works. This works. It's just about identifying which pair is going to pay you. The direction is easy. You know, so if I were you guys, I would only stick to the pairs that give you a range. That I was so glad Essence picked AUD CAD. I didn't know you was gonna pick that, but I should have known because you're an AUD trader. But it's a perfect example of don't trade this pair. And I'm not saying that AUD CAD is not gonna run next week. It might, but the setup that it's giving us now is not good for business. It's good for the bank's business because they can fool a lot of people, but it's not good for us because we don't know. We don't know which way it's gonna go. It's inside of a monthly order block, and it has a weekly order block right there next to it. It's no range. Go to if you can, Alicia, go to EU. You see that trend line right there?
Yeah, who?
That trend line.
This?
Yep. Yeah, or that channel that people have been trading since November. That thing is about to sell. and a lot of people are gonna get crushed. A lot of people in Ruby's course is gonna get crushed because
They're trying to buy it.
Hell yeah, they're gonna buy it. I know two people that bought it Friday, and I was like, man, you make sure you sell it at the end of the day.
Trend line here.
That thing is gonna sell.
Yep, it came back and rejected. It rejected up here. So
yeah, but if you look at the weekly, you don't even have to make all those marks.
I got some white lines up here. Hold on.
Make it a little bit bigger or spread it out so we can see the candles. Now, you see that bearish order block right there? The last two candles?
Oh, I keep, this? No, you said bearish. That's up here, right? Or are you talking about this?
That's bearish. In fact,
Can you make it bigger?
Yeah, use Oanda. I don't like if this
yeah,
is this
too.
is why I use Oanda. See those candles is bullcrap.
Yeah.
I think I got a bunch of markings on it though.
It don't matter. You hit that trash can. Now you see clearly that there's
it's the same wicks.
The body is different.
The body is smaller.
Okay, so we talking about this one, right?
No, I'm talking about the bearish order block. The last two candles. That's a bearish order block. Price is going to pull back into that bearish order block and dip. It's going to sell. I hate the way you refine your.
It's the same. I just was moving it over. It's just the candle. So you don't think this will get filled, or are you saying it will?
It's going to pull back in there. Yeah, I mean, all I would do. Let me show you how I do it. The way you show. I mean, you're doing it the very complicated way. If you go to that weekly.
My bad.
I would just fib that red candle. And frame up 50 to 60%. You showed me that.
Use the wicks.
Are you? Oh. Now, is that the same area you would that's the imbalance right there, ain't it?
Mm-hmm.
Damn. All that complicated stuff you was doing.
What? I did the same thing.
Oh, mine was a lot easier. You flipping back the views and.
No, that's because you told me to do this, the weekly order block.
Did you see that? So which way is easier? All I did was the weekly order block. Yeah, the 50% on it, and it's a wrap. It's done.
No, you did the weekly candle. You did 50% of the weekly candle, not the
Oh my God, y'all. Hey, do y'all understand it better from Alicia, or y'all understand it better the way I said it?
I don't feel like we've fully seen Alicia do hers because you've been stopping her at every step.
Okay. Let me shut up. Hey, that's because Alicia confused the hell out of me.
I am not confused. That's because I'm trying to catch on to what you're saying. Like, I think we get the same idea. We just get the way.
So when you find the imbalance, you use it on the weekly. I know I just did it, but I didn't write it down.
I mean, I didn't explain it to you like finding the imbalance. I didn't explain it to you like that.
Yeah, it just so happened that the 50% was at an imbalance. Yeah. The 50% was the imbalance area. So we weren't necessarily looking for it.
So come again. So when you, but on the fib, when you use the fib for the candle, you use that for the weekly candle.
Mm-hmm. Yeah, I fibbed so every, like the monthly candle, the weekly candle, at the end of the month, I fibbed the monthly candle. At the end of the week, I fibbed the weekly candle. And a lot of times at the end of the day, I will fib the daily candle, because if you catch a market that has an explosive move from an order block, let's say that candle travels. In fact, after this, we'll go to EC because it had an explosive move. I don't think that it's going to retrace all the way back into the order block after going 132 pips in one day. I think it might retrace shy of the order block, but into the 50% range.
Which would be the 50% range. Okay.
Right.
Okay.
And it's going to leave an imbalance to be filled later on.
Yeah. Is this the swing low thing or no?
The next low, if it's a higher low, will be a swing low. Right?
Okay, yeah. So you got low, and then a higher low.
Right.
And it'll go up a little bit. Oh, but we're not expecting it to shoot up, right? But this is the 4 hours, so I guess that might.
Right, it'll go. So remember, these things happen. They're fractal, so it happens on the 4 hour. But I would say no in this case, because this new swing low isn't lower than any of those other ones on that chart, right? So it's not low enough to grab liquidity from under all that area.
Gotcha. Okay.
Those other ones were lower than the liquidity in that area.
Mm-hmm. Okay. I just be trying to identify it. I like that little setup. So.
Man, that setup is fire, man.
Yeah, it is. Okay, you said go to EC? Or am I passing the ball?
Yeah, I mean, who else wants to do it? I guess you can give it to me.
I'll do it again if nobody wants to do it.
Well, I just got here, so I don't know what's going on. So,
Hey.
Yeah. So, mark it up, Brianna, and Des can watch. We're just marking up charts.
Oh.
And do EC for me, Brianna.
Let's see. Let me find it. I need to find it. Okay. Okay, so I need to share my screen. Where is the share screen? Okay. So first you start off with the monthly and find the order block. Okay. I guess, okay, I know you don't want to guess.
Okay, so since it's in a downtrend, like we're looking for a bearish order block, right?
That would be the top of your market. But you would want to know where the bottom of your market was too. You're looking for both. All we're doing is framing the market.
Right. Where it come from, where it's going.
Yeah, yep. So look at the bottom.
Okay, so first, and then you go look for a lower order block.
It's not lower.
It's not lower?
No, price is lower than that.
Oh, because price is right here. So you want to get a lower block, a lower order block than where price is at now. Yep. Okay. So in this case, I don't know. Would this be because it's a doji?
Yeah.
Yeah, it's still one in there. Did the price break that order block, or did it touch it? Probably came about to that order block, huh?
Wait, what do you mean? Oh, where it's at now? Oh yeah, it came to it. Yeah, it didn't.
So frame it.
Okay. So
okay, now Alicia, this was the case
to refine.
I mean, not necessarily. We don't just leave it right there. Leave it right there.
Okay.
Now go back to the area where price is. Now you see the swing low right there, Alicia?
The candle
right here.
Well, that bearish one right there. Then you got a lower low, which is the white one, and then you got a higher low, which is that other purple. And then the next candle dipped below all of them. It grabbed that liquidity. It just made a swing low. Swing lows are protected. So the next candle that took the liquidity.
What do you mean by swing lows are protected?
They're protected lows. Like nothing should go below them. All right.
Oh, okay.
Go over to the left. Go over to the left. Right there. Go up. Nope. Go over to the right. In the middle. Right in the middle. Right there. So if you look, there's a swing low, and then there's a liquidity grab, and the market shoots the hell up. There's a low, a lower low, and a higher low, and then boom, they take the liquidity and run up. If you got that trade, man,
got it.
It seems like EuroCAD is a master at that. I'm gonna have to make a mental note.
So okay. And it grabbed the liquidity, and then
it shot up. And so it just did the same thing just now. It just did the same thing in the price area that we're looking at now. It grabbed the liquidity. So we can get that kind of meteoric rise, man. I might have to go get me a Tesla.
Give me one too.
Would this be the hunt thing or no?
So at the bottom, that's exactly what we're looking at. A stop hunt. That's a stop hunt low. That's a stop hunt low.
Oh, right here.
Yeah.
Yep.
And then
okay. And at the top, it did the same thing. It looks like up there at the top. Now, it's important to understand that this is easy to see on a monthly chart, but whenever it's top, they tell you to look at it on the daily chart.
Okay, so you want me to finish?
Yeah.
Okay. So I did the monthly. And then I go down to the price of value, find the date. Once you do that framed. Then I go to the daily.
You go to the weekly?
Oh, the weekly. Order blocks. Okay, so I guess I skipped that in the notes because I said if there are no order blocks on the monthly, go to the weekly and find the recent order block. Well, so after I go to the month.
Yeah. So listen, the monthly you're only going to do at the end of the month, right? So you'll already have this marked out. So for the month, you can expect price to respect those boundaries. And if they don't, you need to go, like if it breaks through there, then you need to go and look at look for a different bottom now. But for the month, they should respect those boundaries. So then you would go to the weekly. It's the end of the week. So you would come to the weekly. And you would look for, so the bottom of your market is right there, that monthly order block, right? Where's the top of you? There's a weekly order block above that.
The weekly order block.
It's going to be in between the two order blocks that you have marked out.
Oh, I see. Okay, so the weekly order block would be this right here. The most recent one, right? There you go. It has to be the most recent order block, right? Well,
that's right. That's correct.
Okay.
That's the top. So right now, price can move freely from those areas that you have marked out. Right? Now you got to drop down to the daily.
And there's an order block right there. I gotta get used to using these. Okay. So you would do the fib on the daily candle. Am I going the right direction?
Why would you go from the top to the bottom?
Yeah, I don't know how to use the fib.
You need to go from the bottom. You go the direction of the candle. If it's a bullish candle, you place it from the bottom to the top.
Okay. Candle. Okay, and then and then the golden zone would be right here. I'm just gonna change the color so I know. Okay. So with this, we would be expecting price to have to fill the void and then go to the next order block.
I would agree. Now you can drop down like Alicia was doing and to the 15-minute and all that crap if you want to. It'll be more information in there. But in a nutshell, this is what you're looking for.
Would the 15-minute like help you get but
it'll refine it. Like there's order blocks within there, right?
Oh, okay.
So sometimes you see that order block right before it gets to your zone, maybe it'll turn right there. Or there maybe an order block right after the zone. I mean, it's all sorts of information that's available to you the further down you drop. Okay. The important thing is this. Before you take the trade, if you're up watching this trade, you want to make sure that it reverses, like it rejects either in that zone or in that order block. Once it rejects, you need to watch it break structure going to the upside. And that's when it tells you that it's ready for you to enter. It'll break structure and then it'll pull back and you can get in on the pullback.
In the golden zone, right?
Well, either in the golden zone or below there in that order block.
Oh, I see. Okay. Okay.
It doesn't mean that it has to come right to the zone and immediately leave, you know, but that's just telling you that that's the zone that you can start looking for.
So in two of the, in one of the two.
Yeah.
Mm-hmm.
Okay. Okay. Wow. Okay.
All right. Easy, right?
Yeah, you make it so simple. Like I've been studying, like I told you last night, I've been studying order blocks for like a week now, and I have not been grasping it, but now I get it. Okay. Cool beans. Thank you. Okay. Oh, let me stop sharing. Okay. Okay.
All right. So, wow, we're it's 10 o'clock, or actually it's 11 o'clock. This is this is about a 2-hour chart, 2-hour class. I think we'll cut it here. You guys have any questions?
No, so, okay, just before we go, just to make sure. I mean, no, I'll just watch it. I'll just watch the video. It's okay.
Yeah, and if you have any questions, you can hit me up, you know, hit Alicia up, hit whoever you need to hit up in the chat. And you know, everybody normally is pretty good at getting back with you. I asked some questions at the beginning of the meeting, so I will drop those questions. They're rhetorical questions, but I'll drop those questions in there. So you know, if you guys have any other issues or need further help, you know, just hit us up in the chat. Please drop trade ideas in the chat. You know, it doesn't do any good. I know how I get my trade ideas, but if you guys don't ever drop trade ideas, I can't help you. Alicia can't help you. Des can't help you. Nobody can help you. You know, the goal of this community is to get a group of traders who see the market. You know, Alicia sees the market. She comes up with her stuff different from the way I come up with my stuff, but a lot of times they're the same. And that's the goal. Sometimes they're different, which is cool. It provides me with a different set of eyes to look at the market through. So don't feel like, oh, I'm not as advanced as the next person. Who cares? You know, I mean, we all start somewhere and we'll all get better, but you can't get better if you never try it, if you never break down the chart, or if you never ask questions. You guys have anything for me?
No, sir.
Thank you.
All right. I appreciate it. I'll see you on the chat.
All right.
Bye.
Bye.